Hey, Dan Fitzpatrick here, stockmarketmentor.com, and I'm going back to the well on Crocs. Last week, I noted that Crocs wasn't looking that great. It had cracked down here below the 50, really had a steep sell-off, and my suggestion was that you're actually looking for a short entry on this stock. When a stock's broken like this, and then when you look at you look at the rest of the market, and the rest of the market looks pretty brutal too, then you see a stock like Crocs, and that's a stock that you don't want to be in. In fact, it'd be nice to be short that stock. And then the very next day here, which is today, when the market initially, we'll get rid of that, when the market initially, like for a cup of coffee, went a little bit higher, Crocs actually fell and didn't hardly rally at all before it sold off another almost 4% today. So I'm just telling you, this is a stock that you don't want any part of. Because it's fallen so far, personally, I would not be shorting this stock, but I'm not telling you that shorting it will actually be a losing trade right here. You could see this stock continue to fall down and to hit the 200-day moving average. What it's going to do after that, I have no idea. Couldn't tell you. I'm not Dennis Gartman. But so you could see the stock continue to fall. But personally, I believe that the best trade is if you get some kind of a rally up here and then it fails. Okay, so this is a broken stock, confirming that it's broken, but then it does rally, and maybe it comes to the 50-day moving average, and that's when it fails. And so what you would wind up doing is this. I'm giving you your plan up front. So we'll say this is an up day, green bar. So rallies back up to the 50, tests the 50, and then the very next day it starts to trade down. You don't have to wait till the end of the day. You see the stock test this 50-day moving average, and then the next day start to trade down the other way. So what you do is you go ahead and short the stock, and then you put a buy stop right up above the 50-day moving average. So now you have a very short, you've got a rarely low risk trade, because your risk is limited to where you shorted the stock versus where you're going to get stopped out at, and that is actually just a very, very, a very small amount of money. So you're shorting right, you're taking a small amount of risk, and then frankly you stand to make a lot of money as Crocs does a little reversion to the mean, meaning the 200-day moving average. So anyway, that's my take on Crocs. By the way, if you remember, we had a good question and answer and trader training session today, so I definitely want you guys to check that out. If you are not a member, look, here's the deal. Any idiot can pick stocks in a good market, but when the market is not so good, a lot of us feel like idiots when we keep trying to do the same thing when the markets change. So I'm helping people through that right now. I've been through it myself many times, and I have prospered in these kinds of markets, but frankly, it's only been in recent history. In the past, I actually got a lot of experience giving away a lot of money because I was doing dumb stuff. So the nice thing is you can leverage all of my knowledge about doing dumb stuff so you could start doing the right stuff now, as opposed to having to pay more tuition just so you can do the right stuff later with less money. Okay, so drop that dime, get over to Stock Market Mentor, join for a free trial. If you like it, awesome. If you don't, well, at least you gave it a shot. Okay, all right, I'm Dan Fitzpatrick. I'll see you next time.